A sweater sells for $40 on eBay in under a day, and the seller feels like they've cracked the code. Then the payout lands. eBay quietly removes 13.6% of that sale before shipping supplies, before packaging, before the customer who changes their mind 3 weeks later. A seller who pushed $150,000 through the platform in 1 year ended the year with about $20,600 in their pocket. Before taxes, before paying themselves for a single hour worked. That's a margin most convenience stores would consider embarrassing. This isn't a shortcut to easy money. It's a low-margin fulfillment operation, dressed up as a marketplace. Here is what this actually costs. The spending starts long before the first item ships. Registering as an LLC costs anywhere from $50 to $500 depending on the state, and most people treating this seriously form one right away. A sales tax permit plus the basic bookkeeping setup to track it runs another $100 to $300 in year one. Building out real inventory, enough to look like a functioning store rather than a garage cleanout, takes $3,000 to $10,000 in cash up front, sitting on a shelf for weeks before it turns into revenue. A shipping scale and label printer cost $150 to $300. Boxes, mailers, and tape run 50 cents to $1.50 per order before a single sale even happens. Decent product photography, lighting, a real camera setup costs $200 to $500 because listings with bad photos simply lose to listings with good ones. A year of basic liability coverage for a home-run resale operation costs $400 to $700. Add an eBay Basic Store subscription at $21.95 a month, the entry point for a discounted fee rate and enough listing capacity to look legitimate. Anyone selling into multiple states also needs to track economic nexus for sales tax. eBay handles collection and remittance in most states, but reconciling it still costs $20 to $50 a month in bookkeeping tools most new sellers never budget for. A shelf and extra tape set aside just for processing returns adds a smaller, permanent cost too. One most first-time sellers only think about after the first return actually arrives. All in, before the first sale ships, about $7,800. Now the bills that never stop. eBay's biggest recurring charge is the final value fee, 13.6% of the full sale price, item plus shipping, in most categories as of the February 2025 rate change. Every completed sale also carries a flat per-order charge of 30 cents to 40 cents, no matter the price. That per-order fee already bundles in payment processing under eBay's managed payment system, so there's no separate PayPal cut anymore. Small comfort, since the FVF increase in 2025 absorbed most of what that used to save sellers. The basic store subscription runs $263.40 a year for the privilege of the lower rate. Free listings dry up fast, $250 a month without a store, and every listing beyond that costs 35 cents, which adds up quickly for anyone testing new products. Shipping materials average $1.20 per order once tape and padding are counted. Promoted listings, the pay-to-rank tool competitive sellers rely on to stay visible, typically cost 2% to 10% of the sale price on whichever listings use it. Inventory and listing software runs another $30 to $50 a month. Run the math on a $150,000 a year seller. Final value fees alone total roughly $20,400. Per order fees add about $1,400. The store subscription adds $264. Overflow listing fees add about $400. Shipping materials add $4,200. Promoted listings on half the catalog add about $2,250. And software adds $480. Total cost to operate before the merchandise itself is even paid for, $29,394 a year, extracted from the business whether the year is a good one or a bad one. Now for the money coming in. On resale and arbitrage-style inventory, the cost of the goods themselves typically eats 63% to 70% of the sale price. Call it $100,000 spent on $150,000 in sales. Subtract the $29,394 in fees and operating costs calculated above. What's actually left before the seller pays themselves a dime? About $20,600. That's a 13.7% margin on total revenue. And none of it has covered a single hour spent sourcing product, writing listings, packing boxes, or replying to buyer questions. Spread across a realistic 15 to 20 hours a week of running the operation, that margin comes out to somewhere between $20 and $26 an hour of unpaid labor, before a single return, dispute, or bad buy has entered the picture, and before any consideration of health coverage, retirement savings, or paid time off that a traditional job would include as a matter of course. 13.7% sounds like something a person could live on. It isn't the number that actually ends most eBay businesses. The number that ends them is still coming. Sellers never get a vote when the fee schedule changes, and it changes more than people assume. Back in 2005, eBay raised its basic store fee 60% overnight, from $9.95 to $15.95 a month, and doubled the standard listing fee from 20 cents to 40 cents. Both dropped on sellers by email, no discussion. In January 2008, eBay rolled out a much bigger overhaul of fees and feedback rules, and sellers responded by organizing a week-long boycott starting February 18th. Listing volume, tracked independently by PowerSellersUnite.com, dropped as much as 4.6% in a single 24-hour stretch during the protest, with organizers claiming the real number was steeper. Most recently, on February 14, 2025, eBay pushed final value fees up by as much as 0.35 percentage points across most categories. For a seller doing $150,000 a year, that one adjustment alone quietly pulled another $525 out of annual margin, with 30 days notice and zero input from the people paying it. Each of these changes lands on a business already running at a 13.7% net margin, where even a fraction of a percentage point isn't a rounding error. It's a permanent cut, applied retroactively to sales already priced under the old numbers, absorbed with no phase-in period, and no chance to reprice a catalog before the new math starts eating into every transaction. That 2008 overhaul did more than generate angry forum posts. It shut down real businesses, established power sellers who had spent years building feedback scores, warehouse space, and full-time staffing on top of eBay's platform. Here's what actually happened. eBay's January 2008 changes took away sellers' ability to leave negative or neutral feedback for buyers, while linking power seller fee discounts and search placement to detailed seller ratings that demanded buyers rate sellers 4.8 out of 5 or higher, consistently. A buyer leaving a 4 out of 5, a genuinely good score anywhere else, could be enough to knock a seller below the cutoff for discounted fees and top visibility. Sellers who'd operated since eBay's earliest days organized the boycott, and CNN's Fortune Small Business coverage documented multiple established merchants, including longtime seller Robert Robison, who shut down their eBay storefronts entirely and rebuilt elsewhere. eBay's spokesperson said the company felt no impact from the protest and framed the changes as a long-term benefit to the community. Trackers who followed the fallout through the rest of 2008 documented a wave of long-time, high-feedback accounts going dark in the following months. Not failed startups, but established operations with years of sales history simply walking away. The sellers who left didn't come back to that version of the platform. This wasn't a failure of business sense. It was the predictable outcome of building a business on infrastructure someone else owns, governed by rules someone else writes, and can rewrite at will. A lesson every eBay-dependent seller eventually learns on their own timeline, whether in 2008 or in whatever year the next overhaul arrives. There's a cost that never makes it onto anyone's spreadsheet until it's too late: absorbing returns. The National Retail Federation's most recent data puts the average e-commerce return rate at 19.3%, with apparel and footwear running as high as 20% to 40%. Trace through one order. A jacket lists for $60 with $8 shipping, a $68 total sale. The final value fee comes to $9.25. The per order fee is 40 cents. Outbound shipping costs the seller $7, and the item itself costs $22 to source. That leaves $29.35 in profit. A genuinely solid order. Then the buyer sends it back because it didn't fit. The seller refunds the full $68, eats another $7 to $9 in return shipping, and, because eBay only refunds the final value fee on the item price portion in most return cases, not the whole original charge, that once profitable order becomes a real loss of roughly $15 to $20 once everything is tallied. At a 20% to 40% return rate in apparel, this same story plays out on every third to fifth sale. Multiply that across a $150,000 a year apparel-heavy shop, and the hidden bleed isn't a rounding error. It's tens of thousands of dollars a year that never shows up in a simple revenue minus cost of goods calculation. It only shows up months later, in a bank balance that doesn't match the spreadsheet, long after the seller has already decided the numbers looked fine. There's a second cost, growing faster than any other line on this list, and most sellers don't notice it until their account gets flagged. Chargebacks and payment disputes are the systemic risk nobody prices in ahead of time. Global chargeback losses hit $33.79 billion in 2025 and are projected to climb to $41.69 billion by 2028, a 23% jump in 3 years. The average disputed transaction runs $84 to $110, but the true all-in cost once processing fees, lost inventory, and labor are counted lands between $110 and $315 per dispute. Roughly 3/4 of e-commerce disputes now come from so-called friendly fraud, buyers who received the item and disputed the charge anyway, and sellers win only 45% to 54% of the disputes they bother contesting. A cluster of disputes hitting in the same month can trigger a marketplace performance downgrade or a payout freeze, cutting off cash flow for days or weeks, right when the seller needs it most to reorder inventory. On a business already scraping by at a 13.7% net margin, 3 or 4 unresolved disputes in one rough month can erase the entire month's profit. And a serious payout freeze can shut the business down in a single event, regardless of how well everything else was run. Unlike the final value fee, which at least gets priced into every listing ahead of time, a dispute wave doesn't announce itself until the payout report already shows a negative balance, by which point the inventory tied up in those orders is usually long gone, and there's nothing left to sell twice to make up the difference. Some things genuinely do improve with scale. Buying shipping supplies in bulk cuts per unit costs 15% to 20%. Higher store subscription tiers unlock lower fee percentages and bigger free listing allotments. Wholesale sourcing relationships open up once volume justifies buying in bulk, pushing cost of goods down. But other things get worse, in direct proportion to growth. Return volume scales at least as fast as sales, so the absolute dollars lost to refunds climb every month. Dispute exposure scales with order count, meaning a bad month hits harder in raw dollars even when the underlying rate hasn't moved at all. Quality control, listing accuracy, and customer service all demand roughly 1-to-1 labor as volume grows, unlike fee discounts, which cap out at the top store tier and stop improving. Somewhere past $500,000 to $1 million a year in eBay revenue, the operation stops being a side hustle with a better fee rate and turns into a full warehousing and reverse logistics business that just happens to sell through eBay's front end. A fundamentally different kind of company with a fundamentally different overhead structure, run by someone spending their days managing systems and staff rather than sourcing and listing product themselves. Run two versions of the same $150,000 a year business. Optimistic case. Cost of goods at the low end for arbitrage inventory. 30% of revenue or $45,000. The fee and operating stack from earlier. Roughly $29,400. A low return rate for the category, around 10%, costing about $3,000 in absorbed refunds. No chargeback losses beyond normal baseline. Net profit before the owner pays themselves, about $72,600. A genuine 48% margin, the number that shows up in How I Make Six Figures on eBay videos. Realistic case, same $150,000 in revenue. One wholesale lot arrives 15% defective, a $6,750 loss against the $45,000 spent on inventory. One buyer wins a chargeback dispute the seller loses, plus the $315 all-in cost of the dispute itself on a $400 order. Call it $700 gone. A label printer dies mid-week and needs an emergency $600 same-day replacement to avoid a late shipping penalty. The category's return rate lands where the documented data actually sits, 20% to 40%, instead of a lucky 10%, absorbing roughly $9,000 more in refund losses than the optimistic version. Recalculated profit, about $55,550. Still real money, but a 24% swing from a single ordinary quarter. And that's before any full account suspension. The gap between those two scenarios comes down to one defective lot, one lost dispute, and one broken printer. None of those are freak occurrences. All three happen to somebody in this industry every single week. SBA data shows around 20% to 22% of small businesses shut down within their first year, and roughly half are gone by year 5. Across multiple studies, more than 80% of those failures trace back to cash flow, not a lack of skill or demand. eBay resale operations fail the exact same way, profitable on paper, broke the week a chargeback or a bad shipment hits. 5 specific habits separate the sellers still shipping orders from the ones who quietly stopped listing. They keep at least a month's worth of cost of goods in reserve before scaling up order volume. They calculate net margin per order after the final value fee, shipping, and an estimated return rate deduction. Never list price minus cost alone, since that number is fiction in return-heavy categories. They spread sourcing across more than one supplier, so a single bad lot can't gut a month's margin in one shipment. They deliberately manage detailed seller ratings and handling times to stay inside top-rated plus territory, because that fee discount is the single biggest lever they actually control, and they sell through at least one other channel besides eBay. So a payout freeze or a policy change on one platform is an inconvenient month instead of a business-ending event. That $40 sweater that sold in under a day, once the 13.6% fee, the shipping, an eventual return on a similar item, and a chargeback that landed on a different order the same month all came out. The actual profit that survived was closer to $11. eBay never took a cut of a business. eBay's fee structure is the business. Know the real math before you list the first item, and subscribe for the next breakdown.